Hi, good evening, Professor. My name is Iman Saha, and today I'm going to present my presentation for the week one. And in this presentation, I'm going to discuss about the Netflix Stranger Things Session 4. First, I would like to share my screen. Okay. In this presentation, I have set up the agenda where I will discuss about the case summary regarding the Netflix Stranger Things Session 4, and I will also discuss about the three transactions, and also I'm going to discuss about the accounting accuracy and evaluation, industry insight and border inspection implication, and also the conclusion. And end of this presentation, I have added up my references too for this presentation. Let's begin. Okay, in this first session, first case summary, today's presentation is like a focus on how accounting principles apply to the real world financial transaction in the industry of entertainment, using the Stranger Things Session 4 as our case example. So Netflix already invested heavily in this series, which is episode costing around $30 million to produce. This makes it a valuable example to examine how large scale expenses on actors and crew composition and the revenue from subscription are recorded and analyzed in accordance with the accounting standards. We will work through the actual journal entries and assess how accurately these practice reflect the business in real life. The next slide is the transaction one. So the transaction one is the equipment purchase for the set design. So the company bought the production equipment for the $2 million for the set designing. On our first transaction is involved the purchase of equipment used during the show's production, which is owed around $2 million. And this asset is for the likely spend for the lighting and designing tools. This was recorded as a capital expenditure. So it's increasing the fixed asset and accounts payable. This journal entry help us to understanding how large asset purchases are treated under the equal accounting and is aligned with the matching the principle because of the equipment contribute value over the multiples production cycles. So first is the property and plant equipment will be the debit as an asset, which is owed at $2 million, and account payable, which is liability, will be the credit, which is $2 million. So next slide is the next slide is the wages payment to the production crew. And this second transaction is focused on labor cost. So Netflix paid $500,000 in wages to the production crew after finishing was completed. This is recorded as a wages expense, which is reduced both cash and equity. That's the reason the journal entry will be wages expenses as a debit, which is $500,000, And another way is the cash will be credited as an asset will be the 500,000. So the key of this accounting principle here is that expenses are recognized when incurred, not necessarily when cash change hand. This gives a more accurate picture of the cost associated with the production each episode and ensure that financial reports reflect the true cost of operations. So the next slide is based on subscription revenue from the series. So we will look at how Netflix recognized revenue from the increased subscription following the show release of the 6 million receipt. Only 4 million is recognized as a current revenue. The remaining 2 million is classified as a unearned revenue since the subscription service haven't been fully delivered. On that case, cash will be debited on the 6 million and subscription revenue, which is credit, will be the 4 million because we have received the 4 million. And another transaction will be unearned revenue, which is kind of liabilities, which will be the credit as a $2 million. This transaction shows how Netflix addressed the revenue recognized standard, ensuring their reporting remaining honest and accurate over the life cycle of the subscription. And this spectrum of earn from the unread income help both IFRS compliant and increase the financial transparency too. The next slide will be the accounting accuracy and evaluation. And this transaction, in this slide, I would like to discuss about the evaluated how the accuracy these transactions are portrayed. Netflix series aligns with the accounting equation asset equal liability plus equity and follow GAAP standard. However, one concern in the industry in that some companies capitalize too many costs which can inflate assets. Netflix need to carefully amortize production costs over the time and avoid the aggressive reporting tactics. And accurate reporting is essential for stakeholder trust and long-term sustainability. So, next slide, I have discussed about the industry insight and the broader implications. The entertainment industry employs creative accounting methods to distribute overhead the cost and revenue, delay revenue recognition. That's how the high budget production such as Stranger Things encourage insight of examination from investor and auditors and regulators because of the inside cost structure. Financial statement need complete transparency, especially for publicity that trade companies like Netflix, which is operated under the SEC oversight. These use accurate journal entries enable the organization to perform the internal budgeting and the profitability analysis and project valuation effectivity. This application of GAAP or IFRS accounting standard enables the industry-wide and ethical reporting to reliable financial statement and comparable results as well. And that is my conclusion of this slide. The financial transaction of Netflix is there has to be that has to be the record as per the GAAP methods, and it should be record the financial data through the proper accounting methods. The financial record for the equipment purchase and crew wages, subscription revenue follow as a standard accurately accounting principle, and all the financial transactions follow the accounting equation while the demonstrating that news need and supported to the short-term for long-term financial effectives. The analysis demonstrated that requirement to the accuracy records, cost and revenue because of the incurred reporting would result in a misleading financial statement. The entertainment industry depends on the accounting to support strategic planning and build investor trust and maintaining the financial accountability. That's all my presentation for today, and that's all the references I have listed for this presentation. And thank you very much to giving me opportunity to share my thoughts about the accounting journals and stuff. Thank you.